Hello, trading is closed on the 19th of January 2023. Let's do our disclaimer, go over our calls and make some predictions. It's my trading plan for tomorrow, January 20th. Please remember I can be wrong. Any trade you make should be at your own risk. We said yesterday the opening was critical. We had great support at this low. We said if the support breaks, nothing would stop the decline from continuing, but didn't have to break, and if we gapped up, we could retrace most of this. Here's what we said. Open was critical. The open broke support. It's a major break of major support. Any break has to be confirmed by trading under today's close by 1 cent, but assuming that happens, it's a major break of support and we should go lower, even if we don't go lower tomorrow. MEJT did say this rally wasn't the real thing, that the whole thing would retrace and go under this line, which we did. Well, here was the major support that broke. Here's how I'm counting this. We have 1. We're making an ABC for 2. Here's our Fibonacci grid. If we take the height of A and move it on to B, we have these various Fibonacci targets marked off at 38.2, 50, 61.8, and 100. Well, this one stopped right at the 38.2, which is one place where you can have C have a Fibonacci relationship to A. But when it drops in a straight line like this, it almost never stops there, regardless of what happens tomorrow. When you go like this in a straight line to your target, it's almost inevitable you're going to go at least to the 61.8, which is 38.07, and more likely down to the 100%, which is 36.79. Doesn't mean it happens tomorrow. What makes 36.79 interesting is that if you put the number on the Fibonacci, on the square of 9, and you go up, you hit 48.18 for the market's all-time high, making a beautiful picture and making Mr. Gann a happy camper. So 36.79 cash is a reasonable place for this drop to end. I'm not claiming it's the only place. Well, we always try to call the next day's move. We gapped down, hit lower lows, closed over all the lows. It's a positive pattern if it's maintained at the open. Unless we gap and promptly undercut these lows, we should see higher prices. But even though futures are up slightly, there's no guarantee we're not going to gap and undercut this low. And even if we do rally tomorrow with a reasonable target over 200 handles south of where we are now, probably in a relatively brief period of time, you'd have to be a very nimble trader to catch any rally, and any rally would be counter trend. That being said, though, if we don't gap and undercut this promptly, the pattern is calling for a higher price of print. but it doesn't necessarily mean a higher close. This low was right at a prior FOMC announcement price. Today's close was right at this prior MEJT target, 38.9946, which we cross off the list. And the next stepping stone I have on the way south is the MEJT target of 38.6955, which doesn't have to print tomorrow. But if we start dropping, it's a reasonable place to look for some support. So tomorrow has the early low and we could gap up. It's a positive pattern, but if this falls, which is entirely possible, all that positivity goes away. So the pattern has the early low, it could gap up. We broke support, still need to trade under today's close for confirmation. Gap down, hit a lower low, close over intraday lows. Either we gap and promptly undercut today's low or we see higher prices, but that's no guarantee that we close higher. I can't rule out gapping down, and there are much lower targets ahead, but again, I'm looking at this as the last leg down before a huge rally starts. And that is today's call.